In this video, we'll focus on the share register and the franking account, which work in concert. We need to start by creating a class of shares and authorizing a number of shares in that class. We'll use the most common type, just ordinary shares, and put in 1 million authorized shares, which we'll issue out of. And these need a face value, so $1. Could be anything though. We need to describe any rights or restrictions applying to those shares and a description if necessary. And we can save on those. And now you'll see that if we wanted to, we could edit those shares, remove those shares. We've already done the share issue, so that's not relevant now. Now that we have our class of shares and authorized share capital, we can go ahead and issue some shares to the members. So our issue date is 2016 for this batch. Ordinary, sorry. And we'll issue 100 of those. And here you just need to put round numbers. So that's equivalent to $1. So that's 100 $1 shares. And we could now, if we wanted, edit those issued shares or assign them or remove them. So why don't we go ahead and assign them? We'll select John Doe as our first shareholder, and you can see we've got 100 ordinary $1 shares on that date. We'll issue those on the same date they're issued generally, so share those amongst the shareholders. 50 $1 shares with a certificate 1 to 50. Now in this case, if these shares are not held by John, if he is simply the trustee of some trust holding the shares, you could then add in that trust like that, right? So in this case, we're not doing that. He's going to hold them directly. So here's the direct beneficiary of these shares. Now we've got 50 shares issued to John, and we need to assign the balance. So we'll choose Anna Doe, and we have our ordinary shares. Now you'll notice that there's only 50 available to issue out. We leave the date as is at the issue date, and we share the balance. So this will be certificate 2 and 51 to 100. So what we now have is we now have our 2 shareholders, and we've issued the shares to our shareholders. Now what you will note is that it's possible to transact on these shares, and what we mean by that is we can either dispose of the shares, i.e. reduce the share capital, or transfer the shares to someone else. Now there might be a transfer value for those shares, but that's obviously doesn't change what the face value of the share is. So let's just do that. We'll provide an example of a transfer. I'll select myself, and we could have these transferred on any date in the future. Maybe it's even today, and possibly I'm only going to transfer 25 of those, and that would be certificate 3, and we'd have a serial number of 101 to 125. So now you can see we've ended up with 3 shareholders, and the split in the shares have been affected like that. Now it's also possible to then dispose of those shares. So once again, dispose of those, and in this case we would just simply use the old share certificate number that we already had, which is certificate 3, and that would be 101 to 125, which are going. So now we've disposed of the shares and we're left with our original batch there. Essentially we've effected a share reduction through that process. And this is now what our share register looks like. We've reduced the number of shares, and we still have a record that Andrew was a shareholder at some stage. John now only has 25 shares. Anna has her 50 shares still. Now we'll take a look at the franking account. So in this case we need to seed the franking account balance if there's a balance to start with. And how we do that, we can simply click on that, or we can get in there through the adding of a transaction, or by going through balance. So if we go through balance, let's put in a balance at a date. We'll set that back to the 1st of 7th 2019. Okay. Now note here that the balance is a credit balance if you put in a minus. So we're starting with a minus $100 balance. That's a credit balance. And how do we know that that's a credit balance? Because if we now, as of today's date, add in another $100, now this will be a payment of tax, and we need a description. We see that our balance becomes credit, and we see that we started with the minus 100, so we now have a minus 200. Therefore the credit balances are getting bigger. If we now had another transaction, and we could also do that today, it doesn't really matter, 50, and this will be a debit, so maybe there was a refund of tax. So now we can see that the balance has got smaller. So pretty easy to use the franking account. It's worth noting that once the shareholders have been added in here, that if you look in relationships, you'll find that they've also automatically been added into the relationships module. To handle dividends, note that it's important to take into account whether you have ticked small business entity or not. So if you want the franking credits to be calculated on the basis that the company is paying tax at 27.5% rather than 30%, it's necessary to come in here and tick it's a small business entity. So I think I'll show you that in a little bit more detail as we go through. So let's leave that ticked for the meantime and quickly pay some dividends. So back to the share register, dividends, pay dividends, ordinary, $20,000 worth of dividends paid, 30th of the 6th, 2020. Make sure this is within the year of the tax return if you want these dividends to filter into the tax return for that given time frame. We'll frank it to 50%. Select our members. You'll notice the split between the franked and the unfranked, and the franking credit on the franked only. And now if we look in our franking account, what have we got? We've got our franking credits, and we've gone to a deficit. We're in a franking debit position. Okay, so let's go back to our settings. We'll untick that. It's a, I don't know if you can quite see that there. Let me drag that down. Untick that. Go back to our share register, and we'll pay second set of dividends on with all the same attributes, except that in this case, so that was franked to 50%. Okay, and apply. In this case, we have a different tax rate, right? Sorry, franking account. And what do we see? So we see the difference, the relative difference, and the relative difference is based on the 27.5% versus 30% on the company tax rate.